All right, what is up, traders? What's up, tycoons? We got to talk about gold and precious metals. Man, have they been performing well? We're going to talk about why and how gold loves uncertainty. And then we're going to go over some recent measurements and metrics that are historically bullish for gold. And then, of course, we'll take a look at the charts, right? We're going to break down gold futures, go over a macro scale and how it can potentially head up to 3,600. And then we'll go over a much smaller time frame here on the gold futures on the daily. Then there's a shift. Okay, I want to take a look at junior versus major gold miners. Then we'll look at silver. All right, I remember previously I mentioned to you guys, hey, I'd rather play silver than some of the gold miners because the gold miners were lagging. We'll see, there, as I mentioned, there has been a shift. So we're going to go over many different things that you guys can take a look at today. We'll take a look at the silver miners ETF. We'll compare silver miners versus gold miners. And then there is the junior gold miners ETF. And then we're going to take a look at some individual names within these ETFs, such as Harmony. We'll take a look at GDX and Newmont here as well. Those are some of the popular mining related stocks. But as always, the content provided on the channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. If you're new to the channel, I started a completely free newsletter for you guys. It's called Investment Intelligence. And I give out free, valuable finance and trading content. And I try to sprinkle in a free trade idea in there every week. All right. You guys can check out the website as well and read some of the previous articles. You don't have to sign up and subscribe to it. You can just check out the website. Either or is fine, but that's where you'll get some more of my info besides just YouTube. And if you want access to all my different analysis, different plays I'm looking at, trade ideas, and different things like that, you can join the Investment Intelligence Discord. It's $10 a month. There's a link in the description for all those things down below. These are some of the recent trade ideas over the past couple of weeks. We have Tilray, one of the cannabis stocks, mentioning how there was a nice 3-to-1 risk to reward ratio. It blew way past, the bullish price target there. Actually hit our second bullish price target, and then even went past that. So that was a really nice play. Then Valero, which is an energy company. I've been really focused on energy stocks this year. The stock was back at 144, and we were highlighting the risk reward ratio. It blew way past our first bullish price target and even our third bullish price target. So, those are just a couple examples. Now, gold loves uncertainty. And what do we mean by that? Well, we mean that, typically the stock market does not like uncertainty, okay? And so we've got the S&P 500, basically the stock market here in blue, and we've got gold in green. There's these shaded areas here that you may not be able to see very well, okay? But, take a look how the stock market essentially is going sideways here, right? It's range bound, it's uncertainty, right? And the market does not like that. Same thing over here, right? And then same thing in this period we had over here. And then when you take a look at what gold was doing in all of these time periods, gold was exploding to the upside. So gold loves uncertainty, and that's what we mean by that. And now, specifically, is a very uncertain time in the market, right? In the beginning of the year, we're pricing in 7 rate cuts. Now it's gone down to about 1 or 2 rate cuts due to inflation. So a lot of people are uncertain if inflation is heating back up, if commodities continue to rise and energy continues to rise over the next 2 to 3 months. It's going to be very hard for the Fed to argue rate cuts or people to argue about rate cuts. So that's a lot of uncertainty. Then you have geopolitical crisis, right? The tensions in the Middle East are escalating more and more. And with everything with Iran, the UK, the US, and obviously Israel, things are just escalating much, much more over there right now. So it's a very uncertain time in the market. And the latest strong price action in gold has pushed GLD more than 10% above its 50-day moving average. Historically, we've seen periods of it getting even further, which is about 15% in some cases, but 10% has been fairly stretched in most occurrences. So really all this is telling you is that, hey, gold might start to cool off here. It's not necessarily a topping signal and saying that, oh, it's about to crash. But it's letting you know, hey, think gold is pretty frothy, right? And gold has been running really, really hard. And when you take a look at gold's weekly relative strength index, it just surpassed 77. Now, this is a scenario that's only been observed in 3% of precedents since 1973. Now, all instances above 77 have yielded a remarkable 17% annual return for the precious metal. So that was here recently within the past week or two. And That's extremely bullish. So it's very possible that we're looking at 17% returns, over the next year for gold. So that's really exciting. That's something that I'm pretty excited about. And, we're going to see if that plays out, right? Just because something has happened in the past, it doesn't necessarily mean that it has to happen in the future. But these are data sets that I like to look at, right? I like to rather look at the numbers because numbers don't lie versus someone just spewing their random opinions, and so that's what I try to bring in these videos is I always try to give you guys some really good data, to go off of. Now we are going to get into some charts here, okay, and we could be in the phase of a large super cycle, okay, a 5-wave super cycle, basically taking gold from 1250 up to about 3600. Okay, so just rough math, let's say about a 3x. But it's not going to happen quickly. Okay, I don't expect this to happen this year or anything like that. And the wave 3 target is going to be up here around 2850. Okay, that's about 500 points from where we're at right now, which, is getting close to that 17% annualized return. Okay, when you think of it like that, which is kind of how I'm thinking of it. But, these are all via Fibonacci extensions, doing a little bit of Elliott wave. Wave 3 is typically your strongest and largest wave. And to me, it appears like, we are getting to that point right now. Okay, so I'm pretty excited about that. When we zoom into a daily time frame, all right, and zoom in a little bit more, you can start to see some of these structures. Now, not to do a whole Elliott wave theory explanation video, but market typically moves in 5-wave or 3-wave structures. Okay, and so a 5-wave structure is going to be your impulsive moves that's going to give the direction of where the trend is going, right? And so, we got 1, 2, 3, 4, 5. And then after you get that, you should expect a 3-wave correction. And that's exactly what we got. And I remember at this time, this was when everybody was bulled up, but I was honestly expecting a pullback, right? And if you've been watching the channel, for over a year, we were prepared for a lot of this, took some profits up here, and then we were ready for this pullback here. We got a very clean ABC correction. Now we've got 1, 2, 3. This appears like this is wave 3. We came up to the 2618. And I wouldn't be surprised if we start to get an ABC correction just as we did in the past. When we looked at some of those metrics, we saw that the RSI was very, high, right? It hit 77. And then we took a look and we saw that, it was trading 10% or more above its moving average. And that typically is a little frothy, and we tend to get some type of a correction. So we have multiple things saying that gold could start to pull back. But binary events such as geopolitical tensions and missiles being launched and things like that, they can completely just throw a wrench in your technical analysis, right? And just throw all of that out the window. So, if the market's going to keep going risk off and gold is going to be used as an instrument and a measurement of risk off, we could continue to see gold continue to go higher. For now, 2381 and 2447. Those are going to be your overhead targets, all right, your overhead resistance and supply areas. And if we break below those levels, which we already went below 2381, but if we end up going back below 2381 and staying below there, 2250 to about 2130. These are the areas where I think that the correction could potentially end, right? And so those are potential dip buying opportunities that I'll be paying attention to. Below 2130, we're basically going to be looking at 2090. You can just, maybe call it 2100. We won't get too precise and nitpicky about the levels, but basically around 2100 right there. If we were to break through those. But for now, these are some areas where I'm expecting we could potentially pull back. If we were to finish, and this was a wave 5 up here, and then we get an ABC for wave 4 for the next move up higher, these are some areas that I'm looking at. Now, what we're looking at here is going to be junior versus major gold miners. So you have GDXJ, all right, which is the juniors versus GDX. So when this chart is going up, it means that the juniors are outperforming the majors. Okay, and this looks like it's forming a nice little bottom here. Okay, this blue line is an anchored VWAP. Okay, the VWAP is your volume weighted average price. An anchored VWAP is anchored to a specific time. And so we've got it anchored to the 2021 highs. And you can see, we had a couple false breakouts there. We had a rejection there, some things like that. I think that if this can get above its anchored VWAP, right, which just so happens to really line up with this key little zone that we have here, I think that that's going to be a good sign for junior miners. Okay, you know, people typically chase the gold miners because they're known to have higher beta. Okay, and so what that means is that if gold is going up or down, the miners typically are going to go up or down, at a larger pace, right? And for a minute there, they were underperforming, but they're starting to catch up now. Okay, and so I'm not in any of the silver or gold positions right now. Okay, so I'm not trying to just pump up what I'm looking at. I'm just doing a broad market analysis of the area and trying to look at, which ones do I want to get into and just sharing you guys some of those charts. This is a really interesting one. Remember, if this starts to break out, it means that the juniors are outperforming the major gold miners. Okay. So I think this is a pretty important chart and could potentially, steer you guys into the direction of where the beta is in the market, right? Everybody's heard of that, newsletter called Seeking Alpha. And these are just some ways that you can potentially find alpha in the markets. Right now, this is silver itself. Very clean inverse head and shoulders right here, right? Left shoulder, right shoulder, head, also a wedge here, however somebody wants to draw it, but really we have two chart patterns here. All right, two bullish chart patterns, very strong breakout, and just battling with that 26 level. Okay. Now, ultimately, that was the target, that we talked about on the last silver video. If we were able to get above 2250 and break out here, we were looking for 26, and it ended up pulling back just a little bit below. So we'll see if this is going to be a false move to the upside, such as these false moves. False moves can often lead to fast moves. Okay, false move, false move, and what do you end up seeing? Well, you end up seeing a pretty quick move back to the downside. So I think that's a pretty important saying to recognize. And I think that you really want to be playing into strength here, right? So you can try and find some support levels, below where we're trading at right now, below 2563, which is basically the bottom of this supply zone. But me personally, I'd rather wait and just look for strength, right? And then you can much more easily define your risk. So if silver can get back above 26, right? Specifically that 26, 22 level, well then, I think you're good to hold it, and you're really targeting 32 to the upside. Targeting 32, if you have a shorter term time basis, you could target 28. It all just depends on what your horizon is, what your risk management is. And then you can have a stop loss shortly below, right? Maybe you have it here at 25.50 or something like that. You're risking less than $1 for a $6 move, right? Or if you're just targeting 28, then that's about a 2-to-1 risk reward ratio. That's how I'm going to be looking to play these things. Now you have the silver miners ETF right here, SIL. Again, we've got a VWAP anchored to the previous cycle highs right here. And what is this? Well, this looks like a very potential double bottom right here. Okay, silver typically has a higher beta than gold as well. And so a lot of people, when they think gold is going to go up, they think that, hey, it's time to get into silver. And until recently, gold has been the leader, right? And we're actually starting to see participation and catch up. But what I'm really interested in is, we had support over here, right? We had support, then it got flipped to resistance, then it got flipped to resistance. And then look at where we came up to right near that anchored VWAP here. And not only is this key zone that's been tested as support and resistance multiple times in the past, it's also our double bottom neckline, right? We have a bottom here, right? And then we have a bottom here. If we break through this and basically above 33.29 on the silver miners ETF, yes, we are going to have to battle that anchored VWAP, but above there, we're going to be targeting 40.75 and then previous cycle highs of 52.82. So the silver miners don't really look bad. But as I mentioned, rather than trying to find support here and then let's say it loses support and this is a false move, I'd rather look for strength and look to see if we can break out above, right? And many of these charts are putting in bottoms, putting in nice bases, And we're really looking to see if we can get the breakout, right? If we zoom back out and go to gold, this is the type of charts that, we like. And these are the type of charts that we've been looking at all year and trading charts that look like this, right? Huge base. You have that overhead key level that we have right here. And what do you see? A little bit of a false move here. Then we check back down and we break out, and then we have a strong move to the upside. It's not just gold that's made this move. There's so many stocks across the market that just have these huge bases. And then, sometimes they have a little bit of a false move and check back out, really a false breakout. And then they get the real move. That's just something to consider and keep an eye out on. Right now, this is silver miners versus gold miners. And what do we see here again? Right, we have a key zone right here. We're testing that key zone. If we can break out, and this is a nice base, then it looks like silver miners could actually start outperforming gold miners. So when you're looking at things on a relative basis using these ratio charts, what are we seeing? Well, we're seeing the junior gold miners appear to be putting in a bottom, trying to break out relative to the gold miners. And then you have the silver miners looking also like they're appearing to be putting in a bottom, trying to break out relative to gold miners. So if you're a true beta chaser, right, and you want, the riskiest play that could potentially give the most reward from a beta standpoint, it looks like silver miners and potentially even junior gold miners might be the path. Okay. And so, I mean, you could even call this a little bit of an inverse head and shoulders right here. If you were to say, hey, here's your left shoulder, here's your head, and then here's your right shoulder. And, this could be our neckline right here, and attempting to break out of that neckline right now. So do we check back and blast off? That's something we'll have to see and, pay close attention to and monitor. Now, this is GDXJ. This is your junior gold miners ETF. And again, guys, what are we seeing here? Well, we're seeing a potential base here, above 41. I think you can potentially, play this for longs and just cut it below 40 and look to re-enter into strength back above 41. This one did get above its anchored VWAP. It actually closed exactly on that anchored VWAP. And if we continue to move higher, you can start to use that as a little bit of a trailing stop loss and say, hey, as long as we're above this anchored VWAP, then I know that buyers are in control from this. Basically, the past 3 years, buyers have finally gained control on the average volume weighted price. Now we've got Harmony right here. We'll go over some price targets. So above 41, you're targeting 50.61, and then prior cycle highs of 66. Harmony is going to be a junior gold miner stock. Massive inverse head and shoulders right here. And we just talked about it on the silver miners to gold miners ratio chart. Here's your neckline for this inverse head and shoulders. What do? Breakout, check back, blast off, right? Very, very clean, right? We could just draw this as a huge base right here, and then we finally break out above 764. I think this is heading to 1116, but this is not really the cleanest entry right here, right? If you can check back a little bit closer, that's not a bad idea. And again, you can define your risk using 764 kind of as a stop level, right? If we take a look at the gold miners itself, GDX, this is one of my favorite chart patterns right here, the inverse bump and run. Not to make things too complicated, but there's basically a prevailing downtrend, and then you get an aggressive bump down in price that we had. And now we've broken through that first trend line. So we've broken through the first trend line. In a perfect world scenario, an inverse bump and run is going to take you back up to where the pattern began. For GDX, above 33, we're looking to target 46. Okay. Below 33, we don't really want to be involved. This one has reclaimed its anchored VWAP as support. You see, we had a little bit of a false move here and then a very fast move to the upside. We came back, retested it, bounced, retested it again, forming, a little bit of a double bottom here that played out perfectly, right? And has completed its target. So gold miners don't look bad. We have Newmont, okay, which is a very popular one. If you put this to its prior cycle highs, it's getting close to its anchored VWAP. It did just break a downtrend here. Okay, so it did break a downtrend. And what did it do? It closed exactly back at that previous trend line that it broke out of. So is this going to be a breakout retest push higher? If so, the anchored VWAP here is going to be right around 41, 42, depending on the time that it takes if this does continue to move higher. But, if we break, if this was a false move here, and we can start trading back in this trend line here, I don't think you necessarily want to be involved. Okay. There's lots of other names. There's lots of other sectors and areas that you can look at. And at the end of the day, we still are in a bull market. Okay. We've been in a bull market for over a year now. And it's not always the best idea to try and get yourself involved with all of the laggards. Okay. I think that it's very important to pay attention to, what's been a leader, right? Who have been the leaders? And you want to look for opportunities in the leaders rather than always trying to, bottom scrape or bottom feed, right? And be like, oh, well, this one's not really performing well, but this one's gone up massively. That means that this one should go up massively. Well, oftentimes that can happen, but oftentimes also that's not really the case. And there's a reason why the market, is favoring one instrument versus another, for reasons that you may not be aware of. So I just wanted to mention that to everybody. That's going to wrap it up. Okay. We went over some metals. We went over gold miners, silver, the junior miners, silver miners. There's lots of other metals that look really good too. Precious metals as a whole have been breaking out. The glitter ETF, which is GLTR, the precious metals ETF, I posted that in the Discord, has been looking really good too, and been performing well. So it's not just gold and silver. It's kind of all of the precious metals have really nice chart setups and have been looking really good. Remember, if you want access to the Discord, right? These are some screenshots from some members' profits. Join now. Okay. That's where you get all my analysis. It's only $10 a month. And I'm more active in there, and you can see, what it is that I'm looking at, what things I'm interested in trading, for the upcoming week. I post over 20 plus swing trade ideas inside of there, going over many charts and areas that I'm paying attention to. And there's other valuable resources in there as well. Now, if you don't want to pay, the newsletter is completely free. And this is also where you can get more exposure to my analysis, my thoughts on the market, and really just finance and trading related content. Either way, I'm trying to provide value to you guys. And if you enjoyed today's video and you have some more questions, or maybe you want to do a one-on-one coaching session, go to my Ko-Fi page and click on the commissions tab, and you can book a 30-minute or a 1-hour coaching session there. And we can go over whatever it is that you like, right? Whether it's day trading dynamics, swing trading strategies, if you want to have a interactive Q&A, or maybe you guys want to talk about options or futures or different things like that. Feel free to hit me up. You can also request a video on the topic of your choice. And I'll make a video, YouTube video for you guys. And they also have this little buy a coffee button here, basically a way to leave a tip or donation for the free valuable content I do put out to you guys. Thanks again for watching. Don't forget to smash the like button, subscribe to the channel. And if you enjoyed today's video, most likely you're really going to enjoy this next video here as well. So be sure to click on that one.